think the hardest country transition is from Canada to the United States, and for one simple reason. Canadians generally have Canadian dollars. And so there's a currency issue that they face when they move from Canada to the United States. They also, because they have Canadian dollars, they also have PFIC issues, passive foreign income corporation issues that have to be addressed. So you have to be very, very careful on how you rebuild their investment asset models because they have to be PFIC compliant. I think that's the number one thing we see on a move from Canada to the United States. Some of the issues that you run into when you're transferring assets from one country to the other are whether or not the assets are owned personally or they're inside a corporation. For example, dividends or retained earnings in a Canadian-controlled private corporation have to be zeroed out. Otherwise, you have double taxation issues. If you have a holding company which works well in Canada, you're going to have to dividend that out, pay the exit tax before you're allowed to move in the United States. When you're coming from the United States to Canada, it's a little different. The United States uses revocable trusts, but Canada doesn't recognize a revocable trust, so the assets have to be transferred from the trust to the individual. They use, in most cases, the United States is, how can I put this, is secularized in how it invests. In other words, they will allow unrealized capital gains to build and build and build in assets that are in fact qualified in the United States, but are not qualified to be held in Canada. One of the ways that Americans try to avoid being taxed is they simply assume that they can use mother or father or siblings' address that's in the United States and that the assets will stay there while they move to Canada. Well, Canada, or the IRS and CRA exchange information, and you end up having a Canadian address with an American tax slip, a 1099 instead of a T4. That gets picked up by the federals. Also, the state in which the address is, the state can come back and say, well, where's our tax? You're registered in the state, but you're not paying state taxes. If that happens and you have to pay the state tax, you don't get a foreign tax credit on that. At Cardinal Point, we're often asked to retrofit a client who has not completed a clean exit from one country to the other, and so there is a recourse for that. In many cases, both the countries will give a 6-month duration where you can be residents of both countries in order to get rid of things like principal residence to get the exemption and so forth. So yes, you can retrofit, but like building a house, it's easier to build a house than it is to renovate it.